All right, let's talk some bonds. Let's talk about what we learned from the Fed chief this week. Joining me, the chief fixed income strategist at Schwab's Center for Financial Research, Kathy Jones. Thanks for being with us on a Friday, Kathy. Good to see you.
Good to see you, Oliver.
So when we look at this week, how big a role did Powell play? Tell me kind of what you took away from that.
Well, I think he reflected a more cautious tone on the part of the Fed, which makes sense because we have a new administration with a whole bunch of policies that are in the proposal area that, could spike inflation higher. And I think and send the deficit higher. And I think the Fed has to be a bit more cautious. So I think the Fed really wants to continue lowering rates because it sees inflation going down, but now it's got to be a lot more careful because they don't know what policies will actually get implemented down the road.
Okay. When we look at that potential policy, Kathy, and we look at how bonds moved around this week's inflation, how much momentum can inflation and data on their own carry? Were these numbers enough to kind of like get those wheels moving and then the Trump stuff might grease it, or do we really need that other stuff?
Yeah, the numbers this week were not that bad on inflation. I mean, just a little bit hotter than expected, but we're still talking about 2.7% on core PCE. That's not really a scary number. Now, the retail sales with the revisions were stronger than expected. I think that's actually more meaningful right now because we had thought that we were getting slowing momentum in retail sales, and then they revised up last month, and auto sales were very strong. So now we've got a consumer that looks like it's going into the holiday season in pretty good shape, ready to spend some money. So that's something also that the Fed has to take into consideration. The economy is not cooling off that much. I think the nowcast is around 2.5%. There's still some time in the quarter for that to go higher. So all things considered, it's just a very cautious situation. And again, with the looming prospects of this trifecta of policy proposals that could push inflation higher, I think they just have to the market's going to be very cautious.
This week we saw, and really the past week, kind of a slowdown in the steepening of the curve, which had been bearish steepening since the Fed's cut. And this week we got the 2 years to jostle around a little bit more. 10-year, though, kind of got stuck, basically, still around the post-election high. Tell me what you thought of the price action between those two and how the curve played out.
Yeah, I think the curve was driven by this repricing at the short end of what the Fed will do or may do. So we only have about a 58% probability now of that rate cut in December. It had been nearly 100% pre-election. So now we're down to about, almost 50%. So that 2 year is reflecting a slower and shallower path of Fed rate cuts going forward and a higher terminal rate. While the 10-year had already done a lot of work by moving up from the lows and anticipating, this growth prospects, et cetera, and adjusting to inflation not coming down as quickly. So I think the curve is reflecting this change in expectations about what the Fed will be able to do in 2025 going forward.
Okay. Kathy, December, I think those, just to kind of home in on that point, as you mentioned it, think that should be coming down some more, or where do you think we'll settle in? Because we got one more set of readings, right?
Right. Yeah, I think when we need to see the employment numbers to make that decision. It's probably a 50-50 shot right now. It wouldn't surprise me at all if the Fed decided to pause and just take a breather and get into the new year and see where things are, because obviously it hasn't hurt the economy to have rates where they are right now. But if we got a very weak labor report, then I think the Fed would go ahead and continue to on the rate cutting path, and then maybe every quarter in 2025 instead of every meeting for a while. But again, the numbers are important, especially the labor report.
Great stuff, and a good reminder what we got on the calendar. Thanks, Kathy.